All right, so today we're going to talk about the equity markets. Is the crash imminent? Are the Max 7 completely rolling over? We're going to put emotions to the side. We're just going to look at the technicals, at the charts, and you'll be very surprised what you see. Let's jump right into it. Let's go. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Okay, so this is the NASDAQ, but we're going to start with this. This is the Fear and Greed Index. You know it. You're familiar with it. We're at an 11. We're at a 6, like 2 days ago. That is Armageddon level fear. That is the collapse of the world economy is coming fear. Now, we have to differentiate between the fear and the facts. Ooh, look at this. Alteration. Nice. Nicely done, Wilhelmi. The fear and the facts. So, why do we have extreme fear in the market? It has 4 reasons. The fear of the end of the AI boom, the fear that the US economy is going to fall off a cliff, inexperienced investors that have never dealt with a bear market and don't know what to do. 4, the ETFs, who are highly weighted in tech, especially in the chip sector. And now that the chip sector, a lot of chip stocks went down, had to sell those positions, which then drags down the ETFs and the overall market. Now what helped us on the way up, right? The high index weights of the tech stocks now is hurting us. And then there's a 5th factor that I'd like to point out, even though I'm part of it, and that is basically the YouTube community, which is going absolutely crazy because they know the 2 things that will make you click on a video is this is the next 10,000% uranium stock and the world is going to fall apart, the economy is going to fall apart, Armageddon is here, the collapse is imminent, and nobody understands this yet. And because people are fearful and they don't understand what's going on, they click on these videos. So the best thing to do is don't watch those videos. 95% of these people have no clue what they're talking about. And that leads us to the charts. So let's get right into it. Again, as I've been saying, this is the NASDAQ 100. Does this chart, where the correction from this top, all-time high, to yesterday's close is 7.4%. Does this chart look like a fear indicator of 11 or 6? Basically Armageddon fear. Not at all. And this is what we're getting at. The charts, what they're showing us right now is this is a healthy, a normal correction, not a crash. Are the markets too expensive? Yes. Are the markets overheated? Yes. Are there pockets that are absolutely insane? I'm looking at you quantum stocks, and I'm looking at you space stocks. Yes, and yes, and yes. All that is true, but that is normal market behavior and it's getting corrected right now. The reason why this feels so different is that certain market pockets, the speculative market pockets that have been so popular with retail investors, like the quantum stocks, like the space stocks, are getting absolutely slaughtered. Crypto, absolutely slaughtered. So it feels way worse for some investors than it actually is. If we zoom out on the NASDAQ, does this look like a healthy, normal correction in a bull market or at a complete Armageddon? Now, every crash, every Armageddon has to start somewhere, I understand. But, and there are signs, by the way, that are not positive. Nvidia, for example, right? Great report, stock doesn't do anything. Those are warning signs that I take notice and I take very serious. When stocks stop going up on great news, that's usually when you know that the end, at least the end for the near future, is there in the bull market. The same way in the bear market, people always ask, how do I find the bottom? First, The absolute bottom is a complete lucky shot. But there's one easy way to find the bottom. And that is if the companies report news or numbers, earnings, and they're bad, but the stock doesn't go down anymore after it's been going down for a year or 2 years, whatever. That's when you know the bottom is in. That's why I was talking yesterday about oil. If you don't know what I'm talking about, hit the subscribe button so you don't miss a video like yesterday. If the oil price doesn't break down now, that is a great sign for us that the low is in on oil. We'll see if that happens or not, but that's what it is. So, for me, the purple line is the 50. On the daily, we have broken the 50. This has happened before. This doesn't bother me at all. What I'm looking at is the 200, the golden line. As long as we're above the golden line, and this doesn't really count because that was Trump liberating us from all our money, the bull market is intact. Now, I want to show you something. This is the 2022 bear year. You can't even call it really a bear market. As you can see, when you held on until the 200 broke, yeah, you missed this pocket right here where you could have saved some profits or maybe gained some shorts. But really, if you waited till the 200 broke, you still saved yourself a lot of downside. Or if you were going short, you could have made a lot of money on the short side. So I'm waiting for what's going to happen with the 200, because the 200 has been a great indicator since 2020. Look at this, and we can go further back, but let's not bother you with this. I don't want to make this too convoluted. If you just played to 200, you got the majority of all the big moves. 2020 to 2022, bear market 22, 23, right? You got in pretty early, March 23, and you've been riding this uptrend all the way up. So the 200 is a really good indicator for us. If that breaks, we completely reassess everything. But as of this moment, it's not broken. As you can see, it's going up. Interestingly enough, it's coming close to the lower end of the uptrend channel, double support zone. So let's wait and see. Yes, it hurts what we're experiencing right now, but that's because we're so far away from the 200 before. We knew this is going to happen. And again, really important. Corrections need to feel like the end of the world. Otherwise, people are not selling. For years, people are conditioned to buy weakness. So they would buy any weakness that they could find. That's why we never had a bigger correction. Remember this summer. Look at this, these tiny little corrections. They got bought up all the time. Everybody was expecting a summer correction, actually me included, no doubt about it. But every tiny correction got bought up because people were not fearful. People were saying, yeah, the summer correction, yeah, it's coming. But it's going to go up in the fall. It's going to go up at the end of the year. Well, now we're not going up at the end of the year. We're going down. Fears at maximum Armageddon, aliens are landing levels. That's where we need to be. Otherwise, people are not selling. Otherwise, people would be buying any weakness. Now people are not buying. So this is a completely normal situation that we have here. Now, overall, we are not broken. This is, at this moment, just a correction in the uptrend. And again, we can look at this at the S&P 500 as well. And as you can see, on the grand scale, we still made a higher high. Let's look at the Max 7 stocks, because that is what's going to drive the overall market. As I was telling you before, the pockets, the speculative pockets are getting absolutely crushed. But that's healthy. So far, the meltdowns in quantum computing, in the rocket stocks, in crypto, has not jumped over to the broader market. It actually hasn't even jumped over to other speculative sectors. Look at biotech. Biotech is holding up pretty good. And again, not jumping over to other sectors, the correction in the S&P right now is not even 5% from the top. This is what we're talking about, okay? I know it feels like we're down 40, 50% in the index. We're not. We're not even down 5%. If I would have told you, hey, we're going to have a 5% correction, you've been like, yeah, that's completely fine. That's completely normal. Exactly. Right? So even if we go down to the 200 in the S&P, it's basically a 10% correction. That is completely normal. That's not even considered a bear market. And again, I'm not super bullish. I'm not bullish on the US economy. The US economy has a lot of problems. But boy, I'm in Europe. We have even more problems. The AI trade, yes, it may be overvalued. Yes, there may be overinvestment in the hardware. But that is normal. That always happens in the early phases of a megatrend. I'm just saying, let's be calm. Let's just look at the facts. And the facts tell us, without any emotion, and emotion is always what will break you in the stock market and in the capital markets. The facts show us, yeah, we have more downside coming, but the uptrends are not broken. We are not in a crash scenario. We're not in a meltdown scenario. Maybe that'll come, but we definitely don't have it now. Now, let's look at the Max 7 stocks. Apple. I don't know what to tell you. This is 2025. We just made a new all-time high. It looks good. Google looks great. You just look at the Google chart, you'd be like, yeah, NASDAQ is at all-time highs. Amazon looks interesting. I wouldn't go long in this market, but if I would do it, Amazon would be one of the charts that I would really look at and seriously consider for a swing trade. We got a nice green candle yesterday right at the 200 plus the uptrend channel that has been in place since 2023. So if there's ever a time that Amazon is going to rebound, this is it. Nvidia doesn't look terrible. Doesn't look great, right? Looks like we're going to fall below the 50. But if you look at this right here, I mean, we're basically where we were in July. Now, again, I don't like that we really didn't do anything and that we instead had this nasty reversal candle, this long red candle after the earnings. That's bearish, no doubt. But overall, just looking at it, it's not a terrible chart. It's not a chart that I would buy. Let me show you a terrible chart. This is a legit terrible chart. That's Meta. Okay? So I'm going to go to the weekly here. This is Meta since 2023. Now that is a bad chart. We broke the uptrend. We broke the 50. We have a lot of room to get down to the 200. We're at this crucial blue support zone. And if you follow this channel, you know all about my support zones. I prefer zones over lines because usually that is the lines, they look nice, but usually commodities, equities, currencies, whatever, they get more traded in price zones. All right. That's not a great chart. We break below this blue support zone, we're going to go much lower. Oracle, that is a terrible chart. Clearly. But also, the uptrend from 2023 is still intact. We're basically just correcting the AI data center exuberance. Now, it's happening with a waterfall sell-off that is really brutal. No doubt about it. And would I buy Oracle right now? I absolutely would not. Low end of the uptrend channel? Maybe. At the 200? Now we're talking. Interesting. We still have a long way to go until we're there. But as you can see, we have some stocks of the Max 7 that don't look great. We have other stocks that look more neutral, like Tesla. It's fine. It's still in its 2025 uptrend. It's way above the 50. It's above the 200. Yeah, do we have double top danger here? Absolutely. But at the moment, the way this chart looks, this doesn't look like Armageddon. So we have stocks in the Max 7 that are holding up great. Clearly, that's how the institutions are trying to defend the Max 7 and therefore the ETFs, the indices. We have some that don't look great. Let's take a look at, by the way, I forgot to put up Microsoft. Here we go. Look at Microsoft on the weekly. Is that a great chart? It's not a great chart, but you cannot tell me that's a terrible chart. We're basically where we were in June. We're above the 50. We're above the 200. Uptrend since 2019. I mean, we can go even further away, but you get the point. Absolutely intact. This is not a problem. This is not a Microsoft crash. This is just a correction of the crazy rise that we had after Trump Liberation Day. This is Microsoft, and this is what a lot of these charts look like. So, what does that mean for us? That means at this moment, we do not have a crash in the market. That means at this moment, all we're seeing is a healthy, normal correction that is overshadowed by maximum fear of inexperienced investors in the market that were way too far out on the risk curve and are now getting absolutely Bunsenbrenner to the face, flamethrower to the face with the quantum stocks, with the space stocks, with the crypto investments of some meme coins with doggy names. But the overall market looks fine. So there is no reason to panic. There's no reason to panic sell. Where you want to be is you don't want to be in this speculative part of the market, which is all these sectors that I just told you about, which is AI hardware. I would stay away from that. And that includes the chip stocks, though not all chip stocks look terrible. This is Philadelphia Semiconductor Index. I'm sorry. We're way above the 50, way above the 200. Now, a lot of it has to do with NVIDIA, obviously, but does that look like a crash chart to you? No, that looks like a normal correction chart to me. Still, I wouldn't get in there. There's actually, if you're interested in and thinking about shorting a stock, Supermicro, that stock looks absolutely terrible. Now, don't short it now. But this one looks awful. We're below the 50. We just broke the 200 on the weekly. We know they have problems after they got caught cooking their books. Will you get a rebound in this stock? That is the stock where I would be interested in shorting it. But again, right now, you definitely don't want to short this because this market overall can rebound really, really fast. So let's be realistic. Let's just look at the facts. Let's not get caught up in the fear. There's also a chance, and this is what I also hear from the market, that this is a big time move by the institutions to get in cheap into the market. Basically using the retail fear to get these people to sell their positions to push down the market so they can get in on the cheap. It's also a possibility. And if I look at the charts, that is the more likely possibility at the moment than the US falling apart. Yes, you have Michael Burry, who's coming out with warnings and negative comments. And I'm a big Burry guy, and how can you not after 2008? But you know what? I've heard these Burry warnings in the past 15 years, numerous times. And he was right for a short time, but in the end, he was always wrong. And I've seen this before, where there's this old saying on Wall Street, whereas bears sound smart, bulls make money. Where you had people that called the new economy crash, that called the commodity crash. I remember 2010, 2011, I was sitting in Frankfurt with a very, very famous person from the financial sector that you all know. We're not going to talk about who it is because I really like it, like the gentleman, and this is just the story, the overall story. We're sitting in Frankfurt together with two publishers, and we're talking about writing a book together because his thesis was the collapse of everything is coming. The collapse of states, of football clubs, of the US university system. Everything was going to collapse because they were all so high in debt, and it's going to happen. And I was not a super bull back then. I'm not going to pretend like I had it all figured out, but I was like, I don't think so. I don't want to live in this negative way where I believe everything is going to end and we're all going to have a Walking Dead apocalypse coming. That's not a great place to live and be happy and enjoy life. And second off, I don't see it. And luckily for him also, he never wrote the book. So this never got off the ground, right? But that taught me a lesson where he was right. He was right about a bear market before. And after that, he was pretty much wrong all the time with his calls on the equity markets. He was right with a lot of calls in the commodity market. And this is what happens a lot. When you're a bear and you make like life-changing money in a bear market and everybody adores you as this genius because you're the only one that pointed out the crash that came early, you have a tendency to always go back to this viewpoint. So be careful when you have these people that, and there are only a handful, that called the financial crisis correctly. Don't look at the financial crisis separately, that they got that call right, and they did, and it was brilliant. Also look at what were their predictions in the past 15 years. And were they right on those? You'll be surprised what you're going to find. So, to me, I'm going to let the market tell me what is really going on. And what the market tells me at this moment, right now, is two things. This is just a normal, healthy correction that is double healthy because not only does it cool off the overall market, which is much needed, but it also takes out a lot of speculative money out of the market in these speculative sectors that we talked about. So that's double healthy. As long as we're over the 200, I'm not flipping into bear market mode. Second sign, we want to be where we have real businesses with great valuations. You know where that is? That's the commodity sector. And that's why we've been in there. I actually love high tech. I just don't love the valuations. I don't like the speculative nature that we have in there. And I like to be where the easy money is made. And the easy money right now is being made in the commodity sector. We look at gold producers. They are killing it right now. They're making so much money. They're making so much money, they don't even know what to do with it. Why? Gold prices are going up. The gold bars that they produce, there's an endless demand. They can sell it to any central bank in the world. They can sell it to any institutional investors. They can sell it to any private investors. Everybody will be buying it. It's a product that is in super high demand. Silver, same. We look at some of the commodities. They look good. Do you know a commodity that looks terrible in the metals? I don't. In the energy sector, oil doesn't look good, but we haven't seen an oil price collapse. Again, if the Armageddon, the economic Armageddon, was coming now, after the bad year that oil had had in 2025, man, the institutions and the hedge funds, they would short oil to the ground right now. Instead, let me put up the oil price. Instead, we're looking okay. We're actually above the lows from May. So, this is not a hard riddle to solve at the moment. The oil price doesn't look great, but it doesn't look terrible. And if it was really that bad in the economy, in the US economy that is, A, the oil price would be at new yearly lows because that would be the easiest short in the market for the professionals. B, the dollar would be down. What is the dollar doing? What are we talking about with the dollar? Here's the Dixie on the weekly. Does that look like it's going down or that it's going to go up? All right, that's what I'm going to leave you with. We're going to get more signals. I'm not saying the world is in a great place. It's not. But right now, investors are highly emotional. There's too much fear in the market. And it is fear that is not confirmed by technical data. That is what we're looking at, right? We just look at what the market will tell us. The market is a forward-looking It's a forward-looking institution. Can you say that? You know what I mean, right? 6 to 12 months. And this is not only the equity markets. That's also the FX markets. That's also especially the commodity markets. So if the US economy is going to fall off a cliff, why is the dollar going up? You can say special situation, short squeeze. I'm not going to fight you on this. That's fine. But then why is the oil price not breaking down? If we are looking 6 to 12 months into the future, why is the oil price not breaking down? Think about it. Let's take a step back. Stop watching the YouTube videos of the so-called expert that think they know everything. They don't, because nobody of us knows 100% what's going on. That's why we just look at the technicals. They tell us what the market really thinks. Have a great weekend. Enjoy. Have some ice cream. Get ready for Thanksgiving. I got to go on like a week of fasting or something to be prepared for Thanksgiving. Talk to you later. See you next week. Bye-bye.